Hey everyone, Koch Investor back on our earnings video for today. So Zoom Communication, the pandemic darling, right? The huge winner during the pandemic era, has reported earnings, double beat, and an okay outlook. Now the stock price today is pretty close to the stock price it was the day it IPO'd, but of course the company itself has become much bigger. But the sentiment around software companies right now is very, very low. If you look at software companies across the board, growth is either extremely low or non-existent. With Zoom, there is a little bit of growth overall, but more growth when it comes to the enterprise. Free cash flow margin is pretty nice as well. Lots of cash for a company that has a market cap of around $20 billion. It has around $6 billion in cash. So pretty safe to do buybacks or invest heavily or acquire other companies if it wants to. But is it deep value? Is it a trap? What's going on with Zoom right now? Let's first start with the market share, the competition. So these were the numbers from 2021 and 2022. You can clearly see that Zoom is pretty dominant. Of course, you have to know that Zoom has a free option, so take that into consideration. Now, in markets like the UK and the United States, Zoom makes up 53% of all video call platform searches. Now, with regards to market share, 2021 versus 2022, a clear winner here is Google Meet. Zoom lost 4.5% and Microsoft Teams lost 3.2%. Now, currently, before the market opens, we already have a couple of price target upgrades, downgrades. You can pause the video to look at it a bit better. And now, before jumping into the earnings report, we had an announcement. So they have a new CTO, XD Huang. At first I thought this was an emoji, but apparently not. So he joins after a successful career at Microsoft, where he most recently served as Azure AI CTO and Technical Fellow. And here it comes, the AI mentions. So XD joins us at the optimal moment in our AI journey. In the past few months, we brought several new AI innovations to the market and announced an aggressive roadmap aimed at empowering our customers to work smarter and serve their customers better. Again, doing more with less. Now, jumping into the report, let's first start with a couple of big wins here. So USPS, Dollar General, Valmont, Brookdale, and Purdue Farms, among others. Couple of milestones here. So operating cash flow grew 31% year over year. Zoom Phone reaches $500 million annualized run rate revenue, which is pretty impressive. And they surpassed 500 contact center customers. As for the top line growth, you can see that revenue increased 4% year over year. And you can also see that enterprise revenue continues to outgrow overall revenue. In this case, it grew 10% year over year and now reaches 58% revenue share. The online average monthly churn sits at 3.2%. Now, with regards to the enterprise customers, so the number of enterprise customers increased 7% year over year. Trailing 12 months net dollar expansion rate 109%, which keeps on decreasing. I'll show you in a second what the difference was a couple of quarters ago. And then the numbers of customers contributing over 100,000 in trailing 12 months revenue increased 18% and it's now 29% share of total revenue. Now, with regards to the net dollar expansion rate, if we scroll all the way down to this presentation, you can clearly see that in Q3 fiscal year 2022, we were at 139%. And since then, it has been decreasing. And to be honest, there is no end in sight. Now, where does the growth come from when it comes to revenue? Well, the growth actually came from the Americas, so that's up 6%, and then the rest is down between 1 to 3%. When you look at expenses and margins, so gross profit on a GAAP basis increased 148 basis points, non-GAAP 144 basis points, R&D, sales and marketing, and G&A expenses. R&D is the only one that has increased, all the rest decreased. And so operating profit increased over 450 basis points. And here comes the big positive aspect of investing in Zoom at the current prices. So strong free cash flow and position. So cash balance, $6 billion, market cap, $20 billion. Basically over 1/3 is in cash. Operating cash flow increased 31% with a 29.5% operating cash flow margin. Free cash flow increased 26% with a 25.4% free cash flow margin. Of course, you have to take into consideration the high stock-based compensation. But since this is a software company, stock-based compensation is just part of the story here. Now, in the future, if they can continue to increase free cash flow, if their cash position just keeps on increasing, I don't see why they won't do a share buyback to decrease dilution. Now, when it comes to Q3 and fiscal year 2024 outlook, when it comes to non-GAAP EPS, they expect $1.08 at the midpoint for fiscal year 2024. I think it was a bit of around 30 cents when it comes to expectations, so $4.65 at the midpoint. So all of that is good. Now, with regards to free cash flow, they said here that given the strength in profitability and collections, we are increasing our free cash flow outlook for fiscal year 2024. We now expect free cash flow to be in the range of $1.2 to $1.23 billion. So we're basically paying over 16 times free cash flow right now. Now, what are the expectations for the next coming years? So with regards to sales for fiscal year 2025, we can see a reacceleration of growth here, close to 5%. Then for fiscal year 2026, closer to 6%. When you look at EPS, not much has changed. This year a decrease, then fiscal year 2025, an increase of just 1.67%, and then a bigger acceleration in fiscal year 2026, 4.71%. So to conclude, right now, yes, this was an okay quarter, but nothing more, in my opinion. I don't think this is a blowout quarter that changes the whole story right now. Yes, the underlying business is doing much better than before. They've got lots of cash and they can use that cash to invest more in the business. When macro changes and their customers start spending more, they can accelerate that growth even more. M&As, share buybacks, you name it. But there is a main reason why the market is not super excited right now. It's still a show me more, show me what you've got, because clearly we are still not very convinced. But of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one.